please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Mahesh Patil, the co-chief investment officer of Aditya Birla Sun Life AMC, is with us on the show this morning. Mahesh, hi, good morning.
Good morning.
Things are looking a bit sticky right now because of the way the global cues are panning out. You think it's going to take our markets down in the near term?
Well, I think, yeah, you're right. I mean, the global concerns are again coming up, and you've seen the pressure on the rupee. In fact, despite the rupee depreciation, what you've seen, I think the market has done really well, I would say. Yeah, there could be some correction over there depending how the global cues pan out. And I think we've seen a decent rally in the Nifty in the last 6 months or so. So I think there could be mild correction, which I think one should be prepared for. But I don't see a large correction because the fundamentals are improving. And also, if you look at the rupee depreciation, I think its earnings impact is not really much. In fact, a lot of companies in the Nifty would benefit because of the rupee depreciation. So no major earnings impact, but yeah, sentiment could take the market. There could be a mild correction.
My sentiment is somewhat down because actually all Asian currencies are showing a little bit of recovery. I mean, the rupee are up about 0.25%, the Malaysian ringgit up, okay, just about 0.02 or something like that. The Filipino peso is up about 0.2%. So most of the Asian currencies are actually a little up, but the rupee has seen only selling at the small gap up that it opened at. 71.60-62 was where it opened, now 71.82. Bond yields as well opened at 8.03, now at 8.06. So clearly, the little bit of money that someone found in bonds was reason enough for them to sell the 10-year. And I'm not even going past the 10-year where perhaps the selling pressure is a little more. Mahesh Patil, good morning. That really is the question. You know, now we have to come to terms with a yield curve where the 10-year is at probably 8.1. Some people are calling for 8.25. That will have a seminal effect on some stocks. What would you avoid and what may you buy?
Yeah, so I think there is some pressure on the interest rates, and we've seen that, and it was kind of expected, and because of some tightness in the market, and because of RBI coming in and intervene, I think there was some amount of tightness what we have seen. I think in the context of rising interest rates, I would say there will be some pressure on companies, okay, with high leverage, some of the infra names. Financials could see some impact, but again, there will be differentiation over there. The banks, okay, which have got good liability franchise, high CASA banks, while we've seen interest rates go up, I mean, you've seen the increase in the MCLR rate. So that should benefit some of these banks over a period of time. But yeah, clearly overall financials, NBFC could see mild sentiment weakness. Yes, could be a slight weakness over there. But I think just to answer your question about the rupee weakness, I think rupee didn't really depreciate earlier, okay, when we saw depreciations of some of the other emerging market currencies. So I think it's somewhat of a catch-up, okay, which is happening, and we've seen the oil prices again starting to hit higher. So some concerns on the current account deficit and the BOP has led to the recent depreciation of the rupee, which is slightly sharper than some of the other emerging market currencies.
7% lower now on Zee Entertainment, 3% lower on Sun TV. Even Dish TV, for that matter, is down about 3%. So obviously, there's a bit of a impact happening there. Mahesh, good morning. I wanted your thoughts on autos. That's that's an index which hasn't done well. Some of the large stocks like Maruti, for example, have not done as well as a lot of people thought it would. A couple of two-wheelers also. Your thoughts on this space and any particular sub-theme that you like here?
So autos, yeah, I think if you look at the two-wheeler space, while volume growth has been fairly good, okay, on the back of pickup in the rural demand, especially for motorcycles. But I think the pressure on the margins because of high competitive intensity is a concern which has affected the sector. And again, it's a question of trying to gain back market share. So some of the players, okay, who have lost market share trying to gain in the motorcycle, and Hero is trying to be more aggressive in the scooter. So I think the impact on margin has really seen that the earnings growth probably is not to the extent one was expecting in terms of the volume increases. So I think that's the factor which has impacted the two-wheeler space. On the cars and this thing, I think things are fairly okay. I think the overall volume growth should be fairly good. We don't see any major impact in terms of margins over there. So I think that should do well. Commercial vehicles, on the other hand, have surprised positively.
Yeah.
And after the regulations which came in terms of the loading, which the targets were increased for even the old trucks. So I think after that, one was expecting that one could see a fall in demand, but the recent numbers have shown that the buoyancy is still pretty good. So overall, that sector should report around 10 to 15% kind of a growth this year. And even next year should be good because of the new emission norms which are coming in.
Okay. By the way, the space that's really taking a knock now is the consumption basket yet again. So this is third or fourth day running actually that we're seeing a fall. Godrej Consumers is now down 2.5%. It's lost 10% of its value this week. Page Industries has lost 7% of its value this week, and a couple of others as well are under pressure. Mahesh, your thoughts here? See, the demand is still positive. I mean, nothing has changed. The Q1 numbers were really good, but now people are waking up to expensive valuations. You think you should use?
Yeah, so you're right. I mean, on the earnings front and the outlook front, things are pretty good over there. If I look at the commentary coming in from the consumer names, was fairly good. I think what is happening is that the valuations had become too stretched, and that's what market is probably realizing it now. And in a rising interest rate environment, okay, these companies are slightly sensitive because the cost of equity goes up. So I think there is some amount of derating which is happening because of the long-term assumption in terms of the interest rates are now slightly higher. So that immediately impacts the discounting rate and the PE multiple. So it's more of a...
That I get, but those are the reasons for the fall. But
Sure.
would you buy it? Would you advise buying it at these levels?
Yeah, I think overall the structural story over there remains fairly intact, and these are good quality companies. And I think post the recent correction, or probably slightly more correction from here, again, they will start to look attractive and see good support over there. I think market will look at companies where there is a steady earnings growth, and you will see they will be bought into correction. So any good quality stock which corrects by around 10-15%, I think there will be some buying support coming in over there.
Okay, by the way, the rupee is making a big move now. In fact, just look at that.
Yeah, I saw 88. Yeah.
You know, it's almost, will be interesting to see if we get to 70, 72 now. We've started. It's a repeat of yesterday. You know, yesterday also we had $1 fall in crude, and we started on the positive side, but immediately that was sold into, and we made fresh low. This is again getting close to fresh all-time low, and we're approaching 72 already.
13 pies from 72. Yesterday we got up to 3 pies from 72, and now we are 13 pies. So it's not responding with the other EMs. That's the only perhaps negative point in the way it is performing. There were brokers and bankers saying that it's a liquid currency, and a lot of people were long. So when you want to lighten on emerging markets, other markets are not giving you that much of a chance, and therefore you come and sell. When you need money, you sell HUL. It was that kind of a sale that was happening on the rupee. But let's see if stability. No, 93 now, 71, 93. So it is definitely inching closer. It will try and put up a fight at 71.97, I would assume. Yesterday's low. And of course, there is a psychological support for the currency around big numbers like 72. But this is looking a little eerie at this point in time. I think it will refresh and it will show you 71.91, 92. Mahesh, would you advise people now to move a little bit or allocate a little more to fixed income funds? Or do you think even over there further losses are possible?
So I think, again, obviously if interest rates go up, okay, the fixed income side also would see some kind of losses over there. But I think looking at the market and the valuations at this point in time, and looking at where interest rates are, I think it's advisable to have a right balance, right? So in the portfolio, so some allocation towards that over a longer term period, I think would be advisable. But I think again on the lower duration over there, because if interest rates go up, I think there will be some losses over there. So in the shorter term, I think there could be some reason to move some allocation, because over a period of time we've seen that while equities have done well, the allocation of equities in the portfolio would have gone down. So to amount at that, I think some amount of rebalancing in the portfolio, I think would be advisable.
Sure. BEL is now down 20% this week. It's fallen about 4% just in the last 10-15 minutes. I wanted your thoughts on some of these defense companies. As the pricing policy has changed, the government is now cutting down on profit margins for many of these orders. Do you think that it's going to lead to significant margin erosion here?
So I think one has to look into exactly what the terms are, but what we understand is that while the government has reduced the overall PBT margin, there are other costs, okay, which they have allowed them to really include in terms of when they are putting in their bids. So as a overall impact of this, there could be some kind of an erosion, and companies have actually shown, like companies that while the official margins have been what they can get is slightly lower, but because the efficiency is okay, there is scope to increase margins. So companies which are more able to really improve and show improved productivity would still be able to maintain margin. And a lot of companies are also now moving from nomination basis to a competitive bidding.
So good buying opportunity, you think?
Yeah, I think, I mean, if a lot of the PSUs actually have got derated quite a bit. Okay. I think so there is immense value in some of these PSUs, but because of various reasons like some policy changes or fears about supply of more paper coming in the PSU space, I think there is enough opportunity value over there currently. And somebody with a slightly longer term, I think until elections probably might not see some kind of a re-rating over there because the supply overhang would be there. But yeah, somebody with a longer term view, I think where the business dynamics are still pretty much intact, some of these companies really offer good value at this point in time.
All right, we'll leave it at that. Mahesh Patil, thank you very much for joining us with your thoughts.